Hi, welcome to Slay the Spider. I'm Jim B, and I'm the creator and host of Slay the Spider. Shares of the S&P 500 are called S&P Depository Receipts, SPDRs. Spiders. Slay the Spider means I intend to beat the S&P 500 quite substantially. There are three major influences on the movement of stock price, according to a study by Ben E. King. 80% of your investment success will be due to the movement of the sector and the market. Now you can view a weekly snapshot image of the market and the sectors. This is a snapshot from April 9th, 2021. The red arrow, pointing towards the 2 o'clock position, represents the market. The rectangles each represent a mini-sector. They are color-coded to the sector they represent. Healthcare mini-sectors are in red, technology is dark blue, financials are green, media communications are brown, industrials are purple, consumer discretionary are light blue, and all the others are gray. I've been charting this movement since 1998 over more than 25 cycles using this exact mix of 40 mini-sectors. The key to understanding the movement and what makes the cycle predictable are the psychological stages that investors experience as they go through complete market cycles. It rarely changes. These stages are on the outside border of the circle. The placement of the sectors and the market are completely data driven. The interpretation of what to expect next is from my experience of going through the cycle dozens of times. I'm not always perfect, but the beauty of the circle is that it corrects me quickly when I don't get my prediction absolutely correct. I've learned it's okay to be wrong now and then, but absolutely abysmal to stay wrong when the data says otherwise. This is how the sectors move this week. First, in the health sector, the number of stocks on buy signals in all three mini sectors declined substantially this week, and biomedical moved into bear country. In media communications, all three mini sectors, internet, telephone, and media, all declined. Internets moved to the bear side. In technology, all the mini sectors, semiconductors, software, electronics, and computers declined, and software joined semiconductors in bear country with a significant decline. In consumer discretionary mini sectors, leisure, autos, and restaurants declined. Retail and household products were unchanged, and gaming, a big advance for last week, declined significantly. In financials, finance gained slightly, Wall Street declined, and other mini sectors were unchanged. In the industrials, aero declined slightly, metals rose, steel rolled flat, and machinery tools rose sharply and crossed back into bull territory. Chemicals rose slightly, building products and waste management didn't move. In the other groups, precious metals rose slightly, electric utilities declined slightly, forest products and transports rose while business products declined. Protection, safety, and food declined while oil services, oil, and gas utilities continued up. Even as the Nasdaq, the Dow, and the S&P are at or near highs, this week 10 mini-sectors remained unchanged, 11 rose, and 19 mini-sectors declined. One mini-sector, machinery tools, crossed to the bull side, and three sectors, electronics, internet, and biomedicals, went from the bull side to the bear side. Overall, the market score dropped from 79% to 70%, as a net 230 more stocks declined into sell signals. Since the peak February 12th, 1,261 stocks have gone from buy signals to sell signals out of my universe of just over 6,200 stocks. This means the weaker companies are selling off first from our market tops. This is normal, and one of the keys I look for internally in the markets. A few weeks back, I predicted that we would be starting the 4 o'clock loop and then the subsequent rally. And when I went back and to find this chart, I was surprised to learn it was actually 5 weeks ago that I printed that chart and said the 4 o'clock loop was about ready to start, I thought it had only been like 3 weeks. But here we are. We've got over a dozen sectors that have been dropping down, and we're about to see some fairly explosive downside action in the markets. And it'll take a week or two, and we'll know for sure. As you saw in the previous chart, a dozen sectors have started the 4 o'clock loop. This includes some very influential sectors: semiconductors, software, internet, drugs, biomedicals. The S&P and Dow Jones may be hitting new highs, but plenty of stocks are overwhelmingly giving sell signals. The bears will prevail in the short term during the 4 o'clock loop. They always do. Want to protect your portfolio value during the downtown? Buy one SPY S&P 500 put contract for every 20K of the value of your portfolio. It will get you through the downturn nearly unscathed, including taxes on the put option. Buy just one out-of-the-money put with an August expiration, like an August expiration put option at a strike price between $3.90 and $4.10. Paid subscriptions are now available. They're $15 a month on a month-to-month basis. On an annual basis, it's $144 or $12 per month. 90-day free trial, and no credit card is required. Thanks for watching my Slay the SPiDeR video this week. For those of you who are new, so far this year we've gone through about 8 of the events on the Slay the SPiDeR circle, and I called all 8 of them correctly. And for those of you who watched everything since January, you're welcome. See you next week. Thanks.